So Google started the day strong and then it took a nosedive the rest of the day. Specifically, Alphabet Inc. Class A, for some reason, started pretty good today and then it just kind of went straight down and they ended up losing about 1.3% during trading hours. They're up 0.07% after hours. This is right after we've gotten some decent news for Google recently. One is that they convinced OpenAI to use TPU chips in their win against NVIDIA. So basically, OpenAI is going to use Google's chips for their AI technologies, even though Google is technically like one of their main competitors. One of the reasons they're doing this seems to be to diversify their AI chip supply. They've also been using Alphabet's Google Cloud services to meet compute capacity needs as well. And this was announced in the last couple of weeks.
OpenAI is planning to add Alphabet's Google Cloud service to meet its growing needs for computing capacity. That's an interesting move, given that Google is deeply involved in its own AI efforts, obviously. The report notes that the partnership is also a way for OpenAI to diversify beyond its reliance on Microsoft's compute power. But regardless, this is going to be a 4-month high, Sarah, on Alphabet shares, which we know had some difficult times in April and May.
Well, it's just so interesting to see competitors, partner, frenemies, right? Because they compete with OpenAI on DeepMind, and they compete on search as people are increasingly turning to search on ChatGPT, and then Google, Alphabet, and Microsoft compete, obviously. So it's just interesting to see all these relationships form and these partnerships.
Gemini.
Some other good news for Google and other companies in America is Canada rescinded their digital services tax recently to help improve negotiations on tariffs.
Nation's trade dispute with Canada is back in the spotlight this morning. Canada has rescinded a digital services tax on tech companies. This includes those based in the United States. It comes after President Trump announced on Friday he was suspending trade talks with the country. NBC News White House correspondent Yamiche Alcindor joins us now with the latest. Yamiche, good morning. Great to see you. So these first payments, they were actually initially set to be collected today. This is, again, from Canada's digital services tax. Why do we think they're backing away from the tax right now?
Well, it seems as though this is a direct result of President Trump pulling out of trade negotiations altogether, saying that he was terminating all discussions with Canada related to trade because of this digital services tax. The other thing that's interesting is that we saw a number of tech companies come out, American tech companies come out and praise the president's move. We saw Meta, which of course owns Facebook. We also saw Google, the leaders of Google coming out saying that this was a good move by the president. So this seems to be Canada wanting to back away from this tax because President Trump was just so angry at it about this tax. The other thing to note is that the president was saying at one point that Canada did not have the power in this struggle, that this was really going to end badly for Canada, and that he was just essentially not going to talk to them until this digital services tax was taken away. So it seems as though Canada is doing this because of the president's reaction, though.
Now, we've also got some other theories from the Motley Fool about why Alphabet stock popped and then dropped today. So they're talking about some of this news. Again, they mostly just mentioned the Canada news of the digital services tax being rescinded. But the bad news here, they're not really sure exactly. If you basically just read over this, they don't seem to be sure why it just went straight down after that news, even though it started pretty well at the beginning of the day. As you can see, previous close was 178.53. They were up around 180, almost 181. Then they're back down to 176. As they said, the up part of this story is easier to explain than the down. So they basically just go on to say that they think that Alphabet may just be a little too expensive. They're talking about here how they reported earnings as calculated according to generally accepted accounting principles of more than 110 billion over the last 12 months. The company's still spending heavily on its artificial intelligence, which may or may not work out, but it's costing them massive amounts of capital, which basically reduces its free cash flow to less than $75 billion, which basically means for every $1 Alphabet reports as GAAP profit, it's actually making just 67 cents in real free free cash flow. At a price to free cash flow valuation of nearly 29, Alphabet stock looks more like a sell than a buy to me. Now, that's also relative when you look at that, depending on the industry of the company. It's not really a one-size-fits-all of what a good number for a company is for their price to free cash flow, but in their opinion, they think it's a little too high. Now, others might tell you that whether or not a price is high for a stock is based on their PE ratio, which is actually quite good right now and pretty low, especially for a major tech company. And then you're also getting it's not a high dividend yield, but it's something. It's just under 0.5% of a dividend yield at 0.48%. The problem is you're just not, now again, as I've said, obviously past results do not equal future results, and this could all be subject to change, and we'll go over a couple reasons why this could change here in a second. But year to date, not looking great, down 6.9%. The past year, down just under 4%, and over the past 5 years, still pretty solid, but if you're comparing it to like Nvidia or many other tech companies like Meta even, Alphabet has not had as good a returns really as some of these other major ones that a lot of others would compare it to. For instance, Nvidia is up 1,544% in that time period, and Meta is up 216% over that time period. Another thing I thought was interesting is hedge funds seem to be selling Google stock lately, or at least after Q1. Now, this might have still been before VO3 and all these new tools have been released, so this may improve in Q2, but some of the hedge funds were pretty negative on their sentiment towards Google stock at 94% sell, but you do have in May 2025 a 99% buy, which is only one insider. So it's kind of a small sample size, obviously. And that was in May. They bought a huge number of shares, about 360 million shares of Google in the last 3 months. The sentiment is still a high buy score on Robinhood at 83.3%. Only 16.7% say hold and 0% say sell. As far as their benchmark scores, Gemini has kind of pulled in front of ChatGPT seemingly in the last couple of months. If you look at MMLU, 90% compared to GPT-4's 86.4. Big Bench Hard Reasoning, you have a pretty close, almost a tie in that area. Mathematical Proficiency, 94.4%. Code Generation, 74.4%. Natural Language to Code, 74.9%. And then you can compare some of the other versions as well. But a lot of the benchmarks I've seen recently had Gemini kind of taking the lead, whereas ChatGPT kind of was ahead for a long time. But especially with the release of actual tools that people can use, not only do you have all the different Gemini things like the stream option, the chat option, and all these other things that you can do with it now, but they have a really good, obviously, video generation platform that's one of the probably top 2 or 3 easily in the Google VO3, and that's going to attract people paying $200 to $250 a month just to get access to that along with their other suite of products. You could definitely make the case that Gemini is in the lead in the AI race, or at least in the top 2. Another reason to be possibly bullish on Google stock is their expansion of Waymo. Waymo is a autonomous ride-hailing service, or basically the vehicles that are for that service, and they have partnered with Uber. Uber had their own cars that they were working on, but then they decided to kind of pivot and then make a deal with Waymo for Waymo to provide the self-driving cars for some of Uber's new services. So this is going to be a really interesting race, because whoever wins this will be a huge player in a whole new industry in the future, because you have, your own cars. Then you had Uber kind of disrupt that industry, but still everybody still has their own personal vehicle. Uber mostly disrupted more of the taxi service. But now you're eventually going to have people who don't even need personal vehicles anymore, because they will be exclusively using something like Waymo. And Tesla is trying to get in that race. Amazon even had a secretive play in that race as well that kind of came out recently. But it looks like Waymo is by far in the lead in terms of where they are even able to test their vehicles right now. So I would say those are two of the better reasons for optimism, even though the stock just really has not given us what we want lately. I mean, again, another disappointing day. It just feels like even though they say they're up 5.75% in the past 5 days, I mean, the past 6 months, you're not really liking it. The past month, you're only up 4%. So they had kind of a pretty strong week for the most part. But other than that, nothing's really looking that great, except maybe more of the long-term view in terms of their returns. It's just a matter of like, will Waymo and AI breakthroughs cause another bull run for Google stock, or will it just continue to be kind of a meh stock that doesn't get huge returns but maybe has, at least 5 to 10% a year or something like that?